Did you know a simple late form could cost your business £100 for every 50 employees every single month? Yeah, today we're going to make sure that that doesn't happen to you.
That's right, £100. And look, this isn't some one-off fine. It's a penalty that can just keep piling up month after month. So let's break down exactly what Class 1A national insurance is and how you can manage it to keep your business compliant and your money where it belongs. And to guide us through all of this discussion has been arranged by the experts at My Tax Accountant. They're all about making tricky UK tax topics, just like this one, super clear and manageable for business owners.
So here's what we're going to cover. First up, what even is Class 1A NIC? Then we'll get into the numbers, how to figure out what you owe. After that, we'll look at the all-important deadlines. And crucially, we'll dive into the common mistakes people make and finish up with some smart ways to actually reduce your costs. Sound good? Let's get started.
All right, let's dive right in. First things first, what is Class 1A NIC? We've got to get the foundation right before we build on it. So what are we talking about here? In simple terms, Class 1A NIC is a tax that you, the employer, pay. It's not something that comes out of your employees' paychecks. It's paid on the value of most of those non-cash perks you provide, the things HMRC calls benefits in kind. You know, stuff like a company car or private healthcare. And who's on the hook for this? Well, pretty much any employer offering perks. So if you're a limited company, a partnership, or even a sole trader, and you're giving your team or directors anything extra on top of their salary, then yeah, this is for you. Okay, so what kind of benefits are we actually talking about? Let's bring this to life with an example. Imagine Sarah. She runs a small design agency right in the heart of London. If she decides to offer her team private medical cover, that's a classic benefit in kind. The value of that insurance is what her Class 1A NIC will be based on. And it's the same deal for company cars, gym memberships, or even those larger termination payments. Okay, so we've got the what. Now for the big question. How much? Let's crunch some numbers and figure out how to calculate your liability. Don't worry, it's actually a pretty simple three-step process. First, you've got to figure out the taxable value, the cash equivalent of every single benefit you provide. Step 2, just add all of those values up to get one total number. And finally, you just apply the current Class 1A NIC rate to that total. Simple as that. Now, this next part is absolutely crucial, especially if you're planning your budget for the next year. The rate is jumping. For the 2025-26 tax year, it's going up from 13.8% to a flat 15.0%. Now, that might not sound like a huge leap, but it means the real cost of every single benefit you provide is going up. That private medical insurance Sarah offers your team, it's about to get more expensive for her business. This makes planning ahead more important than ever. Right. This next section is where so many people get tripped up. We're talking about reporting and paying HMRC, the deadlines, and the nitty-gritty details. Let's make sure you're not one of them. Okay, you need to get these dates burned into your calendar. We're talking about July 2025, and these deadlines relate back to the tax year that just ended in April. So by the 6th of July, you have to get your P11D and P11DB forms submitted online. If you're old school and paying by check, it has to be with HMRC by the 19th. And this is the big one. For electronic payments, the money has to be cleared in HMRC's bank account by the 22nd. I'll say that again, not sent on the 22nd, in their account by the 22nd. Okay, here's a pro tip that could literally save you a world of pain. That 17-character payment reference, it is so important. Getting this wrong is one of the most common mistakes we see, and it causes payments to get lost in the system. And you know what that means? Penalty notices, even if you paid on time. So how do you nail it every time? Your reference has to be exactly 17 characters. You start with your 13-character accounts office reference number, you'll have that. Then tack on the last 2 digits of the tax year you're paying for. So for the tax year ending in 2026, you'd add 26. And here's the magic bit. You always finish with the digits 13. That 13 is like a secret code that tells HMRC's computers, hey, this is a Class 1A NIC payment. Get that sequence right and you're golden. And just a quick reminder on how to pay. This has to be a completely separate payment. You cannot, and I repeat, cannot, bundle it in with your regular payee payments. You can do it through a bank transfer, use a debit or corporate credit card online, or even set up a direct debit. Just make sure it's a standalone payment. That's not all. Here's where most people go wrong. Stay with me. This next point might surprise you. It's all about the costly pitfalls. See, here's what many business owners don't realize. There are two completely different types of penalties you can get hit with. First, there's the late filing penalty. That's for not getting your P11DB form in on time. That's the fixed £100 fine per 50 employees we talked about at the beginning. Then there's the late payment penalty. That one's based on how much tax you owe, and it escalates. And the worst part? You can absolutely be charged for both at the same time.
So it really begs the question, doesn't it? How much does paying late really cost you?
Well, it gets painful fast. Just 30 days late, and boom, you're hit with a 5% penalty. Still haven't paid after 6 months? They add another 5%. A full year late? That's another 5%. We're talking a potential total penalty of 15% of whatever you owe, and that's before they start adding on the daily interest charges that are ticking away in the background.
And this is why being organized is more critical than ever. As the quote says, everything is online now. That little bit of breathing room you used to get by popping something in the post, it's gone. In this digital-only world, there's just no margin for error. Okay, enough with the doom and gloom of penalties. Let's talk about something more positive. How can we get smart about this? We're shifting from just being compliant to being optimized. Let's look at how you can legally and smartly reduce your bill.
This is where a little bit of smart planning can save you a lot of money. Remember Sarah and her design agency? Instead of a taxable gym membership that costs her extra in NICs, she could set up a cycle-to-work scheme. That's completely exempt. The same goes for things like boosting employer pension contributions, providing one mobile phone per employee, or giving those small trivial benefits like a birthday gift that's under £50. It's all about structuring your perks in a way that rewards your team without unnecessarily inflating your tax bill.
And that really brings us to our final thought. I want you to take a moment and think about your own business. Is your benefits package costing you more than it needs to? Because as we've just seen, a quick review could really make a difference to your bottom line. Look, navigating all this can feel a bit overwhelming, but you really don't have to do it all on your own. For expert professional help with your Class 1 NICs or really any other tax question you might have, please get in touch with the fantastic team at My Tax Accountant. Their number is 020-8570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. And for more helpful guides just like this one, make sure you hit that subscribe button on their YouTube channel. Thanks so much for joining me.